Hi, everybody. Thank you so much for joining me. Happy New Year to everybody. Before we get started, please take a minute to click subscribe to my channel to keep up with all of my latest investing and personal finance content. And please check out the link you see on your screen right now for a special message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So it is now 2023, and I'm going to start making my contributions to my retirement account for this year, and I'm going to have some extra cash to invest. So I'm starting to look at some opportunities, especially that are really friendly for retirement accounts. So I'm going to talk about three income stocks, meaning stocks that pay dividends, that I plan to buy this year. Two of them I don't own yet. So the first one, and this one would be new to my portfolio, is a company called Innovative Industrial Properties, ticker symbol IIPR. This is a real estate investment trust, which, if you follow me, shouldn't be too much of a surprise, but they are kind of a really niche player in that they have a really interesting focus. They focus on the cannabis industry. They own and rent out properties that they lease to legal marijuana dispensaries, production facilities, things like that. They have 111 properties located in 19 different states. Most of those are industrial in nature. And this is a really big market opportunity. Legalized sales of cannabis products are expected to hit $52 billion a year in the United States by 2026. That's roughly double what it was in 2021. And this is less of an unstable company than most marijuana stocks are, in the sense that most of its tenants, or all of its tenants actually, sign long term leases. 15 to 20 years is the typical initial term. And all of them are triple net leases, meaning the tenant is responsible for things like taxes, maintenance, and insurance. Innovative industrial properties, for a while there, traded like a marijuana stock in the sense that it went straight up in the 2020 and 2021 market frenzy. It has since come falling back down to earth. The stock is down about 65% from its peak, which gives it a very nice 7.3% dividend yield at the current price, and it's trading at a multiple of just 13 times funds from operations, or FFO, which is the equivalent of earnings. So really cheap valuation, and it's becoming more interesting the more I learn about it. Number two, and you could argue that this is the more boring company on the list, is a company called Easterly Government Properties. Ticker symbol is DEA. They own 95 properties in a variety of different types, offices, healthcare, you name it. But there's one really interesting thing. They only have one tenant, and that is the US government. They lease properties to various government agencies, including the DEA, which is where they get their ticker symbol from. But they own a ton of government properties. You can't get more stable cash flow. Because it's such a stable type of cash flow investment, however, Easterly Government Properties kind of trades like a bond, in the sense that its yield moves up and down with prevailing market yields. So as the interest rate environment has risen dramatically over the past year, it's put pressure on the stock's yield to go higher, and yield and price have an inverse relationship. So the stock has been cut by about 35% from the peak, despite the business doing just fine, doing exactly what it was doing. So this is definitely beaten down because of the market environment, not because of anything really wrong with the underlying business. And because of that, it yields over 7% right now. It's probably this, if you ask me to name the safest 7% plus yielding stock out there, this might be it. Third, last but certainly not least, this is one that I own and have for a long time. In fact, this was my first REIT I ever bought in my portfolio, is Realty Income, ticker symbol O. I plan to periodically add to it more and more over the years. Um, and not just in 2023, but beyond. I've added to it many times in the past. It's my largest REIT holding right now. And the reason is because I've called this perhaps the best overall dividend stock in the market. It doesn't have the highest yield. It's just under 5% right now. It it does have a lot of things to like, though. It has increased its dividend for over 100 consecutive quarters. How many companies can say that? And it doesn't just pay a great dividend, it also has a lot of upside potential. In fact, Realty Income went public in 1994, and since then has handily outpaced the S&P 500's total returns. Its average total return of about 15% per year in almost 30-year history as a public company. They have over 11,000 properties, but there are a lot more they can go after. They just acquired their first gaming property, for example. It's a really interesting business and it's set up for stability. Most of their tenants are not very prone to recessions or e-commerce disruption. They have a lot of retail, but things like Walgreens and dollar stores and businesses like that. So those are three income stocks I plan to buy very early on in this year. I think they're all very attractive at the current prices. And thank you for tuning in. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.